Welcome to Bears in Exile. Today is July the 12th, and this is the market overview. We'll be looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And before we get started, I'm going to point out the McClellan oscillator. We were talking last night about it not going in a straight line all the way to the bottom. I thought that that would be a uptick of some sort. It did smooth out some today, and we have a not so steep down move, but it is it's good to see it not in a straight line anymore. And it is about to cross over the zero line. If it does, that is a bad sign. And if it does get a crossover into past the zero line, we should expect some sort of a retest of the zero or a hook back above zero before continuing on its way down. So anyways, just wanted to point that out right at the get-go, and I'm going to switch the chart and we'll take a closer look at everything else. And here we are with the SPX, and actually I'm going to change this over to the Dow. And we'll notice that we have a inverse hammer looking candle. The body's still a little bit too big, but notice that it closed at the lows of the day, very bearish, and this was all done due to the Ireland downgrade. Just what we needed, more Euroland news. And so the downtick target is just a breath away from being met. So kind of surprising that it was not met today, but the market closed before it could do so. On our secondaries, we see the CCI money flow going down to zero. If it gets below it, that will be very negative. RSI also headed towards the 50. If it can get below that, very negative. And MACD finally ticking down, the histogram already ticking down over consecutive days. So does this mean that we're going to get a retest of the bar? Well, we still have a little bit of time, but if we look in the faster time periods, on the 180, we see that we're already testing the bar. We almost have complete crossover prior to entering the bar, and it is about to come into contact. So depending upon the open tomorrow, we may have full crossover prior to entering the bar, in which case 12,400 is massively likely. And secondaries on the 180 are starting to get a bit low, but we shall have to see. That news today was really just a shocker. On the 60-minute, we can see that we have already entered the bar and are exiting. So very interesting. Also on the daily, which is interesting, is we have the middle Bollinger Band, and if we get below that, that will be also a tell that we are going down. So on the SPX, this one is a little more developed than the Dow is. It has been hit harder than the Dow. You'll notice that we do have some crossover on the daily. We are already below the middle Bollinger Band and are within a breath of testing the bar, which is a flat line and non-existent. So just like the Dow, we have a inverse hammer looking candle. The tail is not big enough, but we did close at the lows of the day. This is we already have blown through the bubble corrective target and are continuing on our way. Money flow almost below the zero line. RSI getting close to the 50. Stochastic getting real low, and we do have the downtick on the MACD. MACD histogram ticking down towards zero. Very, very bearish looking. And continuing on to the VIX. Well, this is interesting. We were talking last night about that we need some kind of a pause or a side tick or something like that, that it would make sense. We now have on the VIX this hammer and so that would be a good time for it to do so. Um, it does have room between it and the upper Bollinger Band on the daily, but we are also above the middle Bollinger Band line. Money flow ticking up. RSI now above the 50 finally. Stochastic high, and we're about to get a bullish cross on the MACD and the MACD histogram. Ooh, very bullish. So NDEs trump all charts. You know, here's examples of the power of NDEs. TNA, we have a gravestone doji. So if it's going to take a pause, now would be a good time. You can see that we have some crossover on the short-term moving averages. The flat line of the bar is not far away. We are sitting right at the middle Bollinger Band. If it breaks below that, very bearish. Money flow ticking down, getting close to zero. Same with the RSI. Stochastic room to move to the downside. We have downtick on the MACD. Histogram ticking down. This looks bad. And just a quick look at the 60-minute, we can see that it came down into the bar. It chopped around and has exited the bar below the middle Bollinger Band. I'm sorry, below the lower Bollinger Band, and everything pointed down. Not looking good. We can also see that we have a slight increase at the end of the day on the MACD histogram. So it was ticking up, and could have got through the zero line and gone back up, but instead perhaps we're getting some acceleration, slight acceleration to the downside on the 60-minute. So not too good for the bulls. UUP, here we go. We're really close to the upper Bollinger Band. We have a hammer, and whenever you break through the bar, you almost always have extreme separation, and we see that right now. We do have a downtick on the CCI. RSI still going up. Stochastic very high. MACD and MACD histogram still ticking up. So although the dollar does look bullish, whether it continues up or not, or sideways or whatever, we will have a bubble at some point that needs to work itself out. And the hammer does suggest the need for a pause. We had that spinning top yesterday. It was outside, just outside the upper Bollinger Band, and so we got a side tick, but the side tick was up. Very, very interesting. FXC, inverse hammer, once again outside the lower Bollinger Band, so it is pushing it down. You can see the excessive separation on the short-term moving averages, but it definitely is breaking down. CCI uptick, RSI down, stochastic down, MACD down, plenty of room to move. Euro does not look too happy at this point, but everything is begging for some sort of a neutral day or a slightly positive day. That does not mean that I think that we're going to have a major bullish bounce of any type at this point, but more along the lines of catching one's breath and maybe looking at some of the other news, maybe earnings or something. But it does not look good for the intermediate time period. Absolutely. GLD, look at that huge move. Fear. We've been talking about how gold is the new VIX, and you can see that today outside the upper Bollinger Band, and CCI very high. All kinds of people buying this. RSI just barely getting above the 50. Stochastic high. MACD and MACD histogram, all kinds of room to move to the upside. So gold is looking extremely good, and with the news that we're having, you can't blame it. SLV, grain bar, still essentially a double flatline. Nothing really to see from the secondaries, just a mixed bag. Down, neutral, down, neutral. So staying away from silver like we have for the longest time, but even with the bad news closing at the bottom of the day, maybe tomorrow will open badly down. Maybe it won't, but the charts are saying that they would like a pause of some point, but certainly it doesn't have to. On the flip side, you can interpret the inverse hammer looking structures as, I mean, they have these long tails, so people were trying to buy, and it got smacked back down. So certainly momentum at currently is definitely bearish. So I will be waiting to see if sentiment adjusts or changes or anything like that. But for the moment, absolutely, this is bearish, and just for fun, let's see where it could go, and we'll look at one of the black boxes, black box number 1. You can see on SPX we are below the middle Bollinger Band and close to the flatline bar. We have the minor trend, major trend, and the extreme trend, and we can see that the minor trend has come into contact with the major trend. So at this point, the minor trend should swing around and head back down towards the major trend. Should we do that, we are looking just above the 1260 area, maybe 12,640 or 64. I'm sorry, which is also intersecting with the lower Bollinger Band. So definitely a possibility, and I'll be looking out for that. If we do get a breakthrough of the flatline bar and the minor trend does change and look to go down for a test of the major trend, then that certainly is a realistic and a doable level. But lots of news. The politicians are in a bit of a bind, and they're going to be looking for whatever they can to save themselves. Uncle Ben already today was talking about QE3 and how it could be in the cards. Well, for QE3 to be launched, we're going to need a move down. They need to beg Benny to roll out the QE3. So on one hand, you could say, oh, they're talking about it, we're going to rally. Well, if we rally, then that's going to be off the table. If we continue to go down, then it's a done deal. So just to keep that in mind. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.